Hello viewers, welcome to my channel. I'm Hashim. In this video, I'm going to explain you about an important head of income, that is income from salary. In the previous videos, I've explained you Income Tax Act has divided the incomes into 5 categories. Income from salary, income from house property, profits and gains of business and profession, capital gain, and income from other sources. So totally 5 heads are there. First 4 heads are specific heads, and the last head, 5th head, income from other sources, is the residual head. That means if any income does not fit in the first 4 heads, it will be put to tax in the last head, income from other sources, in this way. So every SSC has to find out in which head his income falls. Income from salary or house property or profits and gains or capital gain, like that. Now, income from salary is the biggest head. Many provisions are there compared to other heads. This head is the biggest head, income from salary. But in examination, you may be asked the question on salary income also. Lot of theory is also there. Don't ignore the theory. In this video, I am going to explain you what do you mean by salary. When we can treat the income as salary income. And what are the different components of salary income? So first of all, the main thing in this video is the meaning of the term salary. Salary means any remuneration received by an employee from the employer out of the employment agreement. So according to employment agreement, any remuneration received by employee from the employer will be treated as income from salary. So the condition is there must be master and servant relationship, employer and employee relationship. Employer is the master and employee is the servant. Whenever this relationship is there, then only it will be treated as income from salary, otherwise not. So only we have to see this condition. If it is satisfied, then only it will be treated as income from salary. Now, components of salary income. So the salary income is divided into 4 parts. The first part is salary, the second part allowances, then perquisites, then profits in lieu of salary. So I will explain all these things in the coming videos. In the first video, I am going to explain you what do you mean by salary, what are the items that may be taken under the head salary, and what is basic pay calculations. That only I am going to explain. In the coming videos, we will discuss more about allowances, perquisites, and profit in lieu of salary. The first part is salary. Salary consists of basic pay. The main prime part of the salary is basic salary. So basic pay plus wages. If there are any wages, that will also be taken under salary. Then gratuity. I will explain in the coming videos. Retirement benefits. The heading was retirement benefit. In that retirement benefit, I will explain more about the gratuity. So during the service period, if the SSC is receiving the salary or at the time of retirement he is receiving gratuity, that gratuity is also taxable under that salary. Then pension. Again, at the time of explaining about retirement benefit, I will explain about pension. Pension received by an employee, then also it will be taken under salary. Commission. Employer's contribution to RPF, recognized provident fund. There are different types of provident fund. Again, one video is there, coming video, provident funds. So if the employer contributes to RPF in excess of 12% of salary, more than 12% of salary, then also the excess will be taken under salary. Interest credited to RPF over 9.5%. Up to 9.5% interest on RPF, it will be tax-free, exempted, not to be taken. If the interest is credited more than 9.5%, the excess is taxable. Then transferred balance from URPF to RPF, unrecognized provident fund, and RPF, recognized provident. If during the current previous year any amount has been transferred from URPF to RPF, that transferred amount is taxable under the head salary. Advance salary or arrears of salary, that will also be taken. Then leave encashment. Sometimes employer will give the benefit to the employee to encash their unavailed leave. That will also be taxable. Income tax of the employee paid by the employer. Sometimes employer will pay the income tax on behalf of employee. So that's also a benefit to the employee. So that will be taken under salary. These are the few items you have to remember. These are the items that will be taken under the first head, salary. Then what are allowances? In the next video I am going to explain. Perquisite profit of salary. The last part to be discussed in this video is calculation of basic pay. Remember, basic pay is the prime salary, the basic salary. That is called basic pay. Then the salary may change every year on account of increment. Normally on account of inflation, on account of rising prices. There is an agreement that employer will compensate for the inflation by giving increment. So at the time of joining the service, some salary will be there. Every year some increment or increase in salary is there, right? That is called graded salary. So in some organization, the basic pay may be in graded form. Like example, 11,000. In the year of joining, first month, first year, the monthly salary will be 11,000. As soon as first year is completed, second year start, there is an increment in salary of 400. So 11,400 will be the every month basic salary. 11,400 for 1 year. So after second year, this again 400 will be increased. So every year 400 will increase up to 13,000. Once 13,000 is reached, then annual increment will be 500. Every year 500 will be increased. This will go up to 15,000. After reaching 15,000, every year, every month, every year 800 will be increased. This will go up to 17,400. Once if the salary reaches 17,400, there is no increment at all. This is called graded form of basic pay. In the next video, I will do some problems. How to calculate the basic pay during the previous year when the basic is given in a graded form. So before going ahead, take the screenshot of the points which I have written on the board, then I'll explain every point. Now, income from salary. First of all, remuneration received by an employee out of employment from the employer will be treated as salary. Remember, any remuneration received by the employee out of employment from the employer, that income will be treated as salary. So you have to remember, so Income Tax Act has given the provision that if a person is receiving some remuneration from another person, employer, out of employment, then only it will be treated as income from salary. Second, according to the Income Tax Act, if the relationship between the payer and the payee. So Income Tax Act 1961 has given the provision, if the relationship between the payer of the remuneration and the receiver of the remuneration is that of employer and employee, master and servant, then only the remuneration received will be treated as income from salary. Simply, the relation should be of employer-employee or master and servant. Then only the income received will be treated as income from salary. If the income cannot be treated as income from salary, then it will be taxable under income from other sources. That's why Income Tax Act has made one head open, completely open, so that if any income does not fall in the first four heads, it will be put to tax in the last head, income from other sources. That's why if we find that the employer is paying some amount to the employee, but it will not come under salary, then it will be put to tax under income from other sources. There are many instances where it appears as salary, but it is not taxed under salary. Simple example I'll give you, the salary paid to MPs, Member of Parliament, or MLAs. Salary received by MP and MLA is from the government. But do you think that there is a relationship of employer and employee between government and MP? No. No employer and employee relationship is there, but still they are getting the salary. So that salary is not taxable under salary income, it is taxable under income from other sources. Now, components of salary income. Income from salary will be divided into 4 subheads. First one is salary, second one allowances, third one perquisites, and fourth one profit in lieu of salary. In the coming videos, I will explain each. In this video, I will explain about salary. In the coming videos, I will explain about allowances, what do you mean by allowance, what are the different types of allowances, what are the provisions for allowances. Then perquisites, meaning of perquisites, how it is taxable. All these things I am going to cover up in the coming videos. Now, some more points regarding income from salary. When you compute income from salary, you have to remember some provisions given by the Income Tax Act. So what are the provisions regarding salary? First, according to section 15 of the Income Tax Act 1961, salary includes. So section 15 of the Income Tax Act 1961 has given that salary must include the following. What are the things? Salary due from present or former employer. That means salary may be received from the present employer or salary may be received from the past employer, former employer. That is taxable under the head income from salary. Second, advance salary received, not loans. If loan is given by the employer to the employee, that loan amount is not salary income. If advance salary is given, for example, current month is January. The employee has requested the employer to pay the salary for the next 6 months in advance. So employer has given 6 months advance salary to the employee. That advance salary will also be treated as a part of salary income. Then arrears of salary, salary due but not paid. For example, during the current financial year, out of 12 months, the employer has paid only 10 months salary. 2 months salary accrued but not received by the employer, by the employee. In that case, Income Tax Act says accrued salary is also income from salary. So while computing income from salary, we have to take all 12 months salary, 10 months salary received and 2 months salary accrued due but not received. It is taxed. So next, salary is taxable on accrual on receipt basis, whichever appears earlier. If accrued appears earlier, it will be taxable. If receipt appears earlier, it will be taxable. Example, during the current year, out of 12 months, 10 months salary paid, 2 months salary accrued, not paid, not due. Sorry, not paid. So that 2 months salary will also be included in the income of the salary income of the employee. Accrued but not received. Similarly, received but not accrued. That means during the current year, the salary received is for 15 months, 12 months for the current year and next year's advance salary 3 months. So totally 15 months salary he has received. So Income Tax Act says tax will be applied on all 15 months. Whichever appears earlier, either accrual or receipt basis. Salary received from 2 employers in the same financial year due to change in employment is considered as salary income. Sometimes the employee may change the employers. So first 6 months he was working in ABC Limited. Next 6 months the employee was working in XYZ Limited. So during the year itself, he has received 6 months salary from ABC company and 6 months salary from XYZ company. Income Tax Act says we will not compute income from salary separately. We will combine the total salary received from both the employers. Next, any amount received from former employer is taxable under this head. Any remuneration or any amount received from the former employer, not present employer, that is also taxable under the head income from salary. Now, any amount received from prospective employer means future employer. Example, there is an agreement between the employer and the employee. Employer says next year you have to join, but I am paying the salary from now this year onwards. That means the employee is getting the salary from the prospective or future employer. that amount received is also taxable under the head income from salary. Next, if the employer pays income tax on the income of the employee, in this case, tax paid will be considered as salary income. Sometimes the employer has agreed to pay the income tax of the employee. For example, Mr. X is the employee. His monthly salary is 50,000. Monthly salary 50,000. Per annum it comes to 6 lakh rupees. So per annum 6 lakh rupees is the total salary income of Mr. X. Employer says, every month I will pay 5,000 rupees as tax for you. The income tax of Mr. X is being paid by the employer. How much employer pays? Every month 5,000 rupees is depositing in income tax department. Every month he is paying 5,000 rupees to income tax department on behalf of Mr. X. So Income Tax Act says, whatever income tax paid by the employer of the employee will be added to salary income. Simple example, per month 50,000. 50,000 into 12, 6 lakh. Employee got 6 lakh rupees salary from the employer. Apart from that, employer pays 60,000 rupees for the whole year as income tax of the employee to the income tax department. Now Income Tax Act says whatever income tax paid by the employer, that will be added to salary income. Salary he has received 6 lakh plus 60,000 income tax paid by the employer. So total 6 lakh 60,000 is the salary income of the employee. Next is, if an employer makes any deductions from salary income like insurance premium, PF contribution, the same should be added. Sometimes the employer will deduct insurance premium or provident fund contribution from the employee. Mr. X is getting 50,000 rupees per month salary. Per month salary 50,000. But according to the agreement, employer says out of 50,000 we are deducting 10,000. Because that 10,000 is for insurance premium and for PF contribution. The net amount, how much he is getting? Only 40,000 he is getting. But Income Tax Act says whatever deduction made by the employer, that should be added back to salary. So again, 40,000 he received, 10,000 deducted, that 10,000 will be added, 40,000 plus 10,000, 50,000 will be the income from salary. So whatever deductions made by the employer, that deduction will be added back to salary. Place of accrual of salary is the place of employment. So whichever place the salary accrued, that will be called the place of employment. So for this purpose, salary earned in India is deemed to accrue and arise in India, even if it is paid outside India. So if an employee has earned salary in India, it is deemed to accrued and arised in India. Whether it is paid in India or outside India, immaterial, because it is accrued in India, so it is an Indian income. Next, salary paid or payable by Indian government to a citizen of India for the services rendered outside India. Sometimes what will happen? Indian citizens are appointed by the government of India and posted abroad in the form of ambassadors. In the form of ambassadors to outside country. Example, USA. Indian embassy is working in USA. Their ambassador is working. Who has appointed this ambassador? Indian government appointed, Indian citizen person appointed. Then whatever salary paid to that ambassador is accrued in India. It is taxable in India. So the person is rendering the service outside India, but salary is paid or generated from India. So it is an Indian income. Salary is taxable. However, if any allowances or perquisites are given to that person who is working abroad, that is exempted from tax. This point you remember. Then exempted tax. If the salary is paid by a foreign government in a foreign country who is not a citizen of India and whose residential status is non-resident, then income is not taxable in India. If a person is working in a foreign country, the income is earned in the foreign country, he is a non-citizen in India, then whatever income he has earned there, it is not taxable in India. Because the income is earned outside India, received outside India for a person who is not a citizen of India. Then any income he has earned there is not at all taxable in India. That's all. So these are the points you have to remember regarding salary. Now, subhead salary. Actually, the components of salaries are salary, allowances, perquisites, and profitability of salary. The first subhead is salary. So what are the items that will come under the head salary? First one is basic pay. Basic pay is fully taxable. In the coming problems, when you see in the problem basic pay, immediately you should think that basic pay is fully taxable under the subhead salary. Under the subhead salary. Then wages. The basic pay or wages, fully taxable. Bonus. Bonus given by the employer to the employee, fully taxable under the subhead salary. Gratuity. What is gratuity? In the coming videos, I will explain you regarding retirement benefits. Gratuity, normally it is the amount which is paid by the employer to the employee at the time of retirement. It is paid by the government employees, it is given to the government employees as well as non-government employees. The gratuity received by the employees, unexempted amount is taxable. That means out of the total amount received from the employer, some amount is exempted. Remaining amount is taxable. So unexempted amount is taxable for gratuity. Pension. Pension, again we will discuss more in the coming videos. Right now, pension is the amount received from the former employer after retirement. When a person retires after providing some years of service, he will get pension. The Income Tax Act says pension is also taxable under the subhead salary. Next one, commission. If employer pays commission to the employee, it is fully taxable under the subhead salary. Then employer's contribution to RPF, recognized provident fund. Again, this RPF we are going to discuss in the coming videos. So if the employer contributes to RPF in excess of 12% of salary, in excess of 12% of salary is also taxable, fully taxable. Then interest on RPF over 9.5% rate. The Income Tax Act says if interest is accruing on RPF, we have to see the rate. If the rate is up to 9.5%, not taxable. If the rate of interest is more than 9.5%, it is fully taxable. Then advance salary receipt. Just now I told you, fully taxable. Then arrears of salary if not taxed earlier. That means previous month's, previous year's salary. So if arrears of salary received during the current year of last year, if it is not taxed last year, now it will be taxable. Then surrender or leave encashment. Sometimes the employer will allow some leave to the employee. For example, per annum, suppose 15 days leave will be allowed. 15 days leave will be allowed by the employer to the employee, but employee has not availed the leave. He has not taken the leave. Then employer will say you can encash your leave. You can get the cash payment for that leave which you have not availed. That is called leave encashment. It is fully taxable. Then remuneration of teachers and lecturers from university or other body for setting up or valuing papers, etc. Taxable under that income from other sources. The teachers and lecturers working in a school, college, they are getting the salary. The per month salary received by teachers and lecturers fully taxable under the head salary. But apart from that, the teachers and lecturers are allotted the contract. The contract work is they have to make the question papers. They have to value the answer scripts. For this extra work of making the question papers or valuing the answer scripts, some amount will be paid by the employer. Income Tax Act says it is not taxable under salary. It is taxable under income from other sources. So amount received for making question papers or valuing the answer scripts is taxable under income from other sources. Income tax of the employee paid by the employer. Just now I told you, if the income tax of the employee is paid by the employer, then that will be added to income of the employee. It is fully taxable. Next, remuneration for extra duties overtime. Sometimes the worker, the employee will work overtime, extra time. For doing extra time, overtime allowance will be given by the employer. That overtime allowance is also taxable under the income from salary. Next, contribution made by the central government or state government or any other employers to new pension scheme under section 80CCD. A new scheme was framed by Income Tax Act under section 80CCD for pension fund scheme. So if the employer contributes, whether the employer is central government, state government or any other body, then if they contribute to this new pension fund scheme, it is fully taxable. So these are the points, these are the items which come under the subhead salary. So if you, with full concentration, if you watch this video, you don't find any difficulty while doing the problems that which item should be taken under which head, subhead. Totally 4 subheads are there: salary, allowances, perquisite, profit in lieu of salary. So under the subhead salary, these are all the items that may appear. That's it. Now the last topic in this video is basic pay. The basic pay is one of the item under salary. Here you can see basic pay fully taxed. First item, basic pay is the prime salary. It is the prime salary. This salary may change every year. The basic pay may not remain same. The basic pay may change every year due to increments. Whenever there is an agreement between the employer and the employee, the employer will specify that every year there will be an increment of so and so amount. So for example, I have taken here, if the basic salary of an employee is 5,000 per month and increment is 200. Increment is 200. That means first year of service, every month he will get 5,000 rupees. When the second year starts, 200 rupees will be increased, increment. Now instead of 5,000, second year he will get 5,200. Every month 5,200. Now this will go up to the end of second year. Then third year starts. When third year starts, again 200 rupees will be included. That means 5,400. So how much would be the salary? First year every month 5,000, second year every month 5,200, third year every month 5,400, next fourth year every month 5,600. Like that increment will go on, right? In some organization, basic pay will be in a graded form. Sometimes the employer will give to the employee a graded form of basic. So what is the graded form? Like this example I have taken: 11,000 dash 400 dash 13,000 dash 500 dash 15,000 dash 800 dash 17,400. This is called the graded form of basic pay. What does it mean? It means that first year of service, when he joins, first year of service, every month he will get 11,000 rupees per month. Every month 11,000 rupees he will get for first year. As soon as the second year starts, the salary will increase by 400. So 11,000 plus 400, 11,400 is the basic pay every month for second year. When third year starts, again 400 will be increased. So 11,400 plus 400, 11,800 he will get in the third year every month. Like this, it will go on increase every year for 400 rupees. Till then, till the amount reach 13,000. When the amount reach 13,000, after 13,000, 400 will not be increased. The increment is 500. So after reaching 13,000, the annual increment will be 500 rupees. Every year 500 rupees will be increased. This will go up to 15,000. When the salary reaches 15,000, after 15,000, the increment will not be 500. The increment will be 800. After 15,000, the annual increment will be 800. So 15,800, then 15,800 plus 800, 16,600, like that, it will change. It will go up to 17,400. 17,400 is the maximum limit of basic. After reaching this 17,400, no more increments are there until and unless the pay scale is revised. If the pay scale is not revised, then there is no increment after 17,400. This is the meaning of the term basic pay. In the next video, inshallah, we'll do the problems also on basic pay. So in this video, I have explained you about the main points you have to remember regarding the salary income, because these points will be considered while doing the problems on income from salary. Then components of income from salary, salary, allowances, perquisite, profitability of salary. So what are the items that will come under subhead salary? I have explained you all the items. And lastly, I have explained you about the basic pay. So if you are satisfied, give a like to the video. Share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. Give your comments on these videos. And subscribe my channel if you have not yet subscribed, and by the super thanks which is given below my video. Inshallah, we will continue the next topic in the next video.